there has been this rush to any kind of critical minerals and to secure it for security reasons, as well as the infrastructure build out. How much more demand have you seen just recently?
Look, the amount of demand, first of all, good to see you, Lisa. The amount of demand is super constructive. It's historical for us. I think across all the critical minerals we are seeing, and a very strong support from clients all over the world, from countries in terms of looking for security of supply. Iron ore continues to be strong. If you look at copper, nickel, so across the board we are seeing tremendous amount of demand for all of the mining that we produce.
The bulk of your customers typically come from China. Have you seen more interest recently from the United States?
We are. China continues to be a strong market for us, very relevant for everything we do, but we are seeing growth outside China. We are seeing growth in Southeast Asia, we are seeing growth in the US, Europe, so there is a diversification going on these days, with other markets looking to amplify their access to critical minerals.
People talk about a commodity super cycle. Iron ore hasn't participated as much in terms of the price gains, and there has been a sort of plateauing in demand from China. Where are the growth opportunities specifically when it comes to iron ore?
So we continue to be very optimistic about iron ore. If we step back and look at the overall demand, we have population growth, we have industrialization, we have other markets growing. Certainly China probably has plateaued and reached their overall peak in terms of production. They are doing more than 1 billion tons of crude steel production annually. We think they will continue to be at that level, but we are seeing growth in Southeast Asia. India is growing substantially. We're expecting India to double the crude steel production in the next 10 years. Even the US is growing, so we are seeing more demand outside China. China will continue to be the key market for all of us, but we are seeing greater demand in other markets as well.
You've seen your copper production increase, I believe, from 5 to 10% of total revenues over the past 5 years. You've talked about wanting to double it again over the next 10 or so years. What does that entail in terms of investing in existing mines, in terms of acquiring new assets? What exactly are you looking at?
Look, we are very optimistic also about the copper demand. I mean, the electrification of everything, which is a secular trend, data centers, all of AI, this will require an enormous amount of supply from copper. We in Brazil are sitting in a tremendous endowment. Vale has a great endowment, especially in the north of Brazil, to produce more copper. We've been doing, last year we did about 380 kilotons. We want to double this to about 700 kilotons. There is an enormous opportunity for us to accelerate the development of the critical minerals and the deposits that we have in the country.
Well, does that require acquiring other companies? Does that require investing large sums in existing mines?
So for us, it's more about brownfield, because the unique advantage of Vale is the fact that we operate with very efficient capital intensity for the projects, because I have the rail, I have the port, I have the entire infrastructure. So for us, it's more about developing near mines and the brownfield around our existing operations. So it's less about M&A, but more about unlocking the potential that we already have.
What about rare earths? Brazil sits on the biggest reserve of rare earths behind China. Are you planning to expand into that at all?
Look, we've been studying if this is something that would make sense for Vale. We do have certain opportunities in Brazil that we are assessing. For us, there are some questions that we have to answer in terms of scale. Can we compete with some of the international players like the Chinese? So this is something that we are currently assessing. I would say our biggest bet is to focus on what we are good and have scale. At this point, iron ore, copper, and nickel, but we're keeping an eye open for other opportunities as well.
Are there any countries or players in countries that would be interested in assisting you to build that out, given the fact that there has been this focus by the U.S. on developing national security and sort of getting reserves?
Certainly, a lot of investors, international investors, local investors that want to partner with us. And we have a few examples here in Brazil and outside where we are working together to unlock, because it's a lot about accelerating the development of what we have, especially in the critical minerals agenda. So we are certainly open to discussions with partners that are willing to come and co-invest with us.
What about the price of oil, given the fact that you have to move all of these very heavy materials from one place to your major customer, which is over in China? Has that hampered demand at all?
No demand, no impact on demand. I think what we had, since we are more distant from our end user or end client, which in this case continues to be China, our most relevant consumer, especially for iron ore, we had an impact in the overall cost for our transportation of the iron ore. Now, but when we look at the overall pricing for commodities, and in particular case for iron ore price has increased more than the impact that we had in our cost, because the marginal producers have been impacted more than Vale. Vale has long-term affreightment for our vessels. We are hedged on the fuel cost. So the impact for us hasn't been negative. In fact, we had a margin expansion as a result of the conflict. But we continue to monitor that very closely.
Is there a limit to how much customers will accept in terms of price increases?
Look, certainly we have to see. I think at this point there is no impact in demand destruction. We are not seeing. The markets continue to be solid, strong. Clients continue to produce. We have to continue to monitor to see to what extent they can absorb the price increase. But at this point, we are not seeing impact in the overall demand.
You have a pellet manufacturing place in Oman,
Yep.
and it has been taken offline as a result of simply not being able to ship the pellets out from the area due to the conflict there. What is your plan in terms of reopening that?
Look, we are ready to reopen. Certainly, we are monitoring the conflict, and we want to make sure our people are safe, and that's the most important thing for us. It is very well located. Oman has a special strategic location, even within the Middle East. We have a great asset. It's a pelletizing facility, which is very important for decarbonization, for a lot of the energy transition discussions that we have. We are, in fact, as we speak, doubling the capacity of that facility. At this point, we're waiting for the conflict to end or to reduce in terms of the potential impact for us to resume our operations. We continue to be very optimistic about the Omanian operations that we have, and we think that could be a hub for a lot of the clients that we have in the region.
So this hasn't pushed out your ambitions at all for the region or curtailed them in any way, the fact that the conflict has kept going?
Not particularly with Oman. We continue to be very committed, and we think it's a great market for us to have, to serve India, to serve other markets, even Southeast Asia. So it's a very strategic asset that we have.
Are you still confident about your full year forecast for costs? Do you expect that to stay where it is?
So, as we mentioned before, I mean, the overall expectation for the year is great, actually. I mean, we had a very strong first quarter. Production across the board, and all commodities are trending very nicely. We had a record production in copper, nickel, and iron ore in the Q1. So I'm very optimistic about the full year performance. We did have an impact in the overall cost base given the fuel cost, but overall margin has expanded. So I continue to expect a great year for us.
You've been in the business a long time in terms of commodities and energy production in general. Do you have any analog to this period in terms of the super cycle that you're seeing and the demand level that you're seeing from clients?
Look, I think what we've seen for iron ore back in 2010, 2014, that period with the super cycle is what we're seeing in the critical minerals. But the more I look into, the more we discuss with clients, I think the opportunity this time around is even greater. So I think we are in a unique moment of our history, Vale particularly because, look, we are located in a country that has an enormous endowment, very well positioned from a geopolitical standpoint. I mean, we do businesses with the US, with Europe, with China. We have an enormous endowment. We have the infrastructure all in place. And the demand is growing across the board on all critical minerals. Even iron ore continues to be very strong. So we are very optimistic. I think it's great to be a miner these days. So we are very excited with that.